This is the Friday, January 6th, 2017 version of the Market Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Hey, thanks for having me.
Man, I had a hard time saying 2017.
Yeah, it's
hard to
weird.
believe we're already in the new year.
Yeah, now you're going to try it on, see if it feels comfortable.
Yeah, I'm going to keep dating my checks 2016.
There you go.
See how long I can get away with that.
Yeah.
New year, rally in cotton.
Yeah.
Up 334 on the week.
Yeah.
What does that tell you, Ted?
I think the rally in the Chinese yuan had something to do with that. So purchasing power there. And also, you know, you talk about soybeans just dominating the acreage mix this year, which I'm not so sure. I've talked to a lot of producers, both, you know, clients, but also on, you know, various shows and things like that, trying to get a good feel for what we might actually see. Because, you know, we can do the math on pen and paper and see what happens. But, you know, the perception is that soybeans are going to dominate acreage and gain from everywhere. So cotton might be fighting back to try to secure some of that acreage and keep some of that locked down. But also, again, currency moves have had something to do with that. We've broken out of the range of the upside a little bit. I'm very curious to see if that's going to extend at this point or not, or if that's just sort of a, you know, kind of a head fake breakout and then we come back down. But
given how fickle cotton has been here for the past year, do you want to make some sales on this nice little breakout?
I think so, yeah. I mean, you got to reward higher prices.
Okay.
And, you know, when we talk about making sales, it's not like we're going to go in and make 100% of sales right away, right off the bat. I mean, we're going to scale into things. And I think right now is a great place to start scaling in a little bit, especially to maybe improve some of the sales that were previously made.
Okay. Now, Ted, you mentioned you've been talking to a lot of farmers, talking to a lot of growers, trying to get a feel on this acreage battle as we get into spring. What's your feel? Are we going to plant 90 million acres of soybeans in this country?
I think we're going to see more soybean acres, but I don't know if it's going to be quite as big as what everybody is talking about. I mean, I've heard, you know, anywhere from 3 to almost 6 million acre shift. Right now, I'm sitting at like 2.5. That's kind of where I'm thinking.
So 86 and change million acres of beans?
Yeah, maybe 87, but I don't see much more than that. Because I do think that you're going to see a lot of, I hate the term fringe acres because, you know, what's fringe acres anymore when you're getting good yields, but
nobody's fringe on market to market.
I absolutely agree with that. Absolutely agree with that. You know, but when we talk about fringe acres, a lot of times we're talking about, you know, North Dakota, for example. Well, North Dakota made the switch quite a while ago to bean acres in a big, big way because corn basis was terrible and still is not that great. So, you know, we've seen a lot of that moves. I think the I states, we're going to see some more bean acres, but you're not going to see a huge tinkering with the rotation. So, yeah, I think we're going to see more acres. Let's go down to the Delta, too. You know, we saw a big shift to bean acres last year because of all the wetness, 14 inches of rain in, you know, 3 days. So we had a lot of corn acres that didn't get planted that ended up being acres anyways. So are we going to see that much more? Talking to guys in Texas, we're going to see more beans in Texas.
Okay.
There are going to be areas where we're going to see more beans.
Okay.
And I think when it all comes together, yeah, you got 2 to 3 million more acres of beans. But I don't think you're losing a huge amount of corn acres in the meantime. I mean, yes, corn acres I think will be down, but I think we're still well above 90 million for corn.
Okay. And we're going to see cotton acres come down a little bit. We'll see. Okay. Yeah. All right. The rest of it coming out of small grains, coming out of...
You know, milo sorghum stands to lose a little bit. You know, I mean, that Chinese demand's kind of fallen. And so we went into an overproduction mode there for what the real demand was versus perceived demand. So there's a couple areas. Rice is another one, you know. So there's a couple areas where we're going to be losing some acreage. It's going to be headed towards beans. But like I said, I don't know if it's as big as what some of the talk has been.
Okay. And that sets us up, I think, really well. As we're sitting at the start of a new year, everybody starts to dream of what this year could bring.
Yeah.
And Phil in Ontario at Agrodome, our friend Phil.
Hi, Phil.
Wants to know, is there a compelling reason to be bullish corn in 2017? Does this massive shift in beans mean that corn's got some opportunity?
The best thing I can say, Phil, is that when you have low prices for an extended period of time, like we've had, and you start cutting acres out of the mix, and you start building that demand base, you know, in a big way, it always sets us up for the potential for something like that if there's a weather issue somewhere. But, you know, just the way things are going, in South America right now, and it's going to be tough to see an extended rally. You know, I mean, and when I say that, I'm talking better than, you know, $4.75, $5.
Okay.
I mean, I think we can hit somewhere in the mid to low fours pretty easily, just on acreage mix and, you know, normal.
And you're talking
weather
on
premium.
December 17 corn.
Yes.
Yes.
Right.
And we're at 386 today.
Yeah, 386, right.
Yeah.
Mhm. So, but in order to get those higher numbers, you know, let's call it above $5, we're going to have a big weather issue somewhere, or more likely something in South America followed by something here.
Okay.
You know, so I think as time goes by, there's more and more reason to think there's less reason for corn to go down by much. And there's more reason to think that there could be that spark at some point that sends corn, you know, sharply higher. But I think with a 2.4 billion, and even if that number comes down to 2.1 or 2.2, which would be very aggressive by the USDA on this January report, but even if that number comes down, it's tough to justify anything above $5 without a weather issue somewhere.
Okay. So, a prolonged,
Yeah.
sustained weather
Right,
issue.
right.
All right. Our next question, same story. And you answered half of it, actually.
Okay.
But Janine in Illinois at Ag News Auto wants to know, how much longer till we see $8 corn or $15 beans? Now, we've talked about corn, but the bean side demand,
Yeah.
global demand,
Yeah.
has been truly phenomenal.
Absolutely.
So has global production.
Yep.
What's going to win out in the long term?
Yeah. First of all, hi, Janine. And second of all, yeah, I mean, we've struggled on the production side of things to keep up with increasing global demand. We've had to do it by really throwing acres and acres and acres globally into soybeans. So that really sets up a powder keg. If we get a weather issue for soybeans, a big one, let's say this, I think it's easier to see $15 soybeans than it is to see $6 corn, mainly because with demand being as strong as it is, production is such a fragile thing that if we were to have a problem, you know, we could be there. So how long do we have to wait? This is a question that, you know, where are the weather guys last year that were talking about 650 corn? I think they'd rather answer that question than I would. But I'll say this. While I do think that, you know, all the acreage that we put into soybeans and the fragility of growing season and, you know, in the past, it's been not very difficult. And sometimes we don't see it, we don't really see it until we get into harvest that, hey, these beans aren't as good as what we were expecting. I will say that I do feel like bean yields have gotten better. I mean, that's obvious, but I guess what I mean by that is maybe bean genetics have gotten better. And we talk about trendline yield in corn, you know, it's been really going higher, higher, higher since the early 2000s. But beans had kind of stalled out for a while. I think bean genetics are now kind of catching up with that corn curve. I think corn will start to level off at some point. But if we keep growing these bean crops like we have, I don't know, it could be some time before we see numbers like that, even with this strong demand.
Okay.
It really all boils down to where is the weather problem, when is the weather problem,
right,
and how bad is it?
Okay. Now, we talked on the program about the wheat market, Chicago wheat.
Yeah.
But we did have another question earlier in the week, again from Tim in Minnesota. Mm-hmm. He wanted us to talk a little bit about Minneapolis wheat. Okay. Minneapolis, Kansas City, when we look at this mill quality wheat, it isn't nearly as bleak a picture as the Chicago wheat picture is. Tell us a little bit about what you expect to happen there.
Well, if you look at the Chicago-Minneapolis wheat spread, we went from, I believe, Minneapolis back in September, October was about 80 over, and then it went out to almost 160. And now it's back to, say, 140 or so, 130s. You're going to keep a premium in the, well, premium wheats. Mm-hmm. Protein's part of it, but, you know, there's a lot of wheat in the world, but not a lot of quality milling wheat in the world. There's going to be demand for that here domestically and both globally. So yeah, that is going to be sort of an area of strength. That spread's been wacky to watch. It's been taking wild swings.
Okay.
But yeah, I mean, you know, I like to think of that similar to, you know, when we had our stock market crash in 2008 and 2009. You know, your cheaper things got cheaper, but your high-end things stayed pretty constant. And that's kind of what you're looking at. I mean, if you want to make the comparison to cars, your BMWs, Mercedes-Benz, or, come on, Cadillacs, Lincolns.
Yep.
You know, those prices are pretty inelastic, let's call it, regardless of what's going on economically.
The people that can afford them can still afford them.
Yes. And the demand's always going to sort of be there, you know. Whereas, the cheaper things, the sheer amount of not great quality wheat in the world is really what's been the problem for Chicago wheat.
Okay.
And, I don't see that really changing in the near future. Well, in the near future. I mean, in the broader picture, we are lowering acreage. Right. So we're doing what we need to do. Low prices low prices are the cure for low prices because we start pulling acreage out. We start lowering production. And recently we're seeing, state by state conditions decline. So maybe we are turning that corner in wheat.
Okay.
Potentially. But, we've got massive stockpiles to chew through, and most of it is not the good, high-quality wheat, which is, again, why Minneapolis is holding the premium.
Given the spread, and the volatility in the spread, and the potential for another cold snap to come through the Great Plains region, would you be wanting to sell that spread, Minneapolis-Chicago spread today, or do you just stand back because it's been too volatile?
Seriously, you're going to call me out on the Widowmaker, are you?
I am.
No, I'm not making recommendations on that. I'm not going to touch that with a 10-foot pole right now.
Okay, all right. The risk of trading involves substantial loss, or whatever the disclosure is.
Not everybody is suitable for trading.
Right.
Blah, blah, blah.
We've got a final question for you, Ted. We've talked about it a lot, particularly since the election, and then again since the Federal Reserve moved rates up a quarter of a tick. This is our commodity definition of the week. Help people who don't live in the commodity world like you do. Who benefits from a strong dollar and why?
Okay. Yeah, that's a great question. So a strong dollar, what that does is it gives us a lot of purchasing power. Okay, so a strong dollar means that we can go, from an individual perspective, I can take my currency and I can go to Europe or I can go to South America, and my purchasing power is huge. From a national perspective, we get to buy goods and services from the country with, we've got strong purchasing power.
Your BMW could get cheaper in U.S. dollars.
Talk about Swiss watches. You can talk about, although
again, it's luxury goods.
Well, that, and also they left. They're not tied to the euro anymore, so that kind of changes things a little bit too. But so our purchasing power is very good right now. It also makes foreign investment somewhat attractive too. Now, where it's bad is that it makes our exports expensive, okay, compared to other places in the world. It's also not really very good for commodities as a whole because what it shows is, if that dollar is worth more the next day, then you need less of that dollar to buy the same amount of commodities. So a strong dollar is generally, not just from the export side of things, is not necessarily good for the commodities markets.
Okay.
But I am a pro-strong dollar guy. It's not great for our commodity exports and corn, wheat, and soybeans. I'd love to see the dollar back down from where it is right now, but I don't want to see it go to the other end because then we start risking, inflation in a big way.
You bet.
So, I'd like to keep the dollar in the low 90s to the mid 80s, that sort of range. And I think ultimately that's where we see it once the rest of the world catches up with raising interest rates and the economic health gets better.
Okay. All right. Well, Ted, thank you so much for taking the time to join us this week.
Always a pleasure, Mike.
Join us next week when Brian Roach joins me at the new market-to-market table. Plus, we'll look at how a wood pellet company is finding new overseas markets. And if you find value in our work, please consider clicking the Donate Now button on our website. So until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.